just when you thought it couldn't get any worse for the crypto market, they suffer yet another blow, and you can see critical levels have now been lost. Whales are dumping coins left, right, and center, and this is the net result. Of course, completely red on the day. Let's have a look at what's happening on the hourly. Pretty much most coins are continuing their sell-off, but one thing that I can say is when you experience peak FUD, then, which is what we're having at the moment, then usually within the next week or two is when you'll find the biggest opportunities, which is why your risk management and risk control is so important in these current markets. And let's get straight into why this is all happening. So one of the biggest unfolding events that have just taken place now is one of the California banks have lost half of its value today. The crypto collapse is now morphing into something potentially a lot worse. And it's the failure of SVB Financial, which could destroy an important long-term driver of the economy as VC-backed companies rely on SVB for loans and holding their operating cash. If private capital then can't provide a solution, a highly dilutive government-preferred bailout should be considered. This is from Bill Ackman. Bill Ackman is known as Baby Buffett. So he is a massive investor, made waves in the industry over there and pretty much following in the footsteps of Warren Buffett. So he's basically suggesting that this would be a bank that had to be bailed out if this continues. And he says after what the Fed did to JP Morgan after its bailout of Bear Stearns, I don't see another bank stepping in to help SVB Financial. The government could also guarantee deposits in exchange for dilutive warrant insurance and other covenants and protection. If SFB Financial is indeed solvent, this would buy time to enable SVB to restore the franchise and raise new private capital. To be clear, a bailout should be designed to protect SVB Financial depositors, not equity holders or the management. We should not reward poor risk management or protect shareholders from risk they knowingly assumed. So you can see this is the liquidity crisis, right? Liquidity, we spoke about this. We spoke about this with the liquidity downturn being the second phase of the bear market cycle months ago. And this is kind of starting to play out now. And he says the risk of failure and deposit losses here is that the next least well-capitalized bank faces a run and fails, and then the dominoes continue to fall. This is why government intervention should be considered. So he's basically saying this run on the banks could become a cascading effect whereby basically other market participants or people that are banking with other institutions might start to run on the banks and withdraw their cash. And we do know that the banks don't hold all the money. I mean, that's common knowledge. They never have all the money. If everybody simultaneously decided to withdraw, then that bank is going to collapse in the long run. And you have here from 𝗪𝗿𝗄𝗧, quite a tongue-twisting name up there. He says, this is the worst case. To us, this is part of the test that the largest banks, i.e. the ones that caused the global financial crisis, so back in 2008, 2009, they are today, so he says, are today the more resilient portion of both the banking and financial systems. So he's saying this is a good indication of a potential stress test if they do survive. And here you are from Joseph giving the asset allocation that they have. They have $200 billion in assets, of which $116 billion are securities, and 80 billion of that 116 billion are high quality liquid assets which could be sold or repoed for cash. And he says looking good until they have to start to dump those funds onto the market or liquidate those assets. And that's currently the state of the market. In other news, this also just came out yesterday, so another blow to the crypto market. Crypto exchange KuCoin is being sued in New York's crackdown on the industry. And basically, they are the New York Attorney General is seeking an injunction to stop alleged illegal activities, including the offering of securities and commodities in the state. So that is being filed in court. And here it is. If you have a look at what they're saying that Ethereum is a security. If those of you who are all the way back in 2018, you were in the market, you'll know that they deemed Ethereum and Bitcoin as commodities and not securities. But now they're coming out and saying it is a security. And here you have a statement which says Buterin, which is Vitalik, the founder of Ethereum, and the Ethereum Foundation retain significant influence over Ethereum and are often a driving force behind major initiatives on the Ethereum blockchain that impact the functionality and the price of ETH. Most relevant here, Buterin and the Ethereum Foundation played key roles in facilitating the recent fundamental shift of the transaction verification methods from proof of work to proof of stake. And we knew this was coming, guys. Remember, they said that there was a possibility that they were going to come and reclassify it as a security once they moved from proof of work into proof of stake. Once that shift was made, they could basically reclassify it. So indeed, one developer who worked on creating the software necessary for the transition stated that his team was granted permission by the Ethereum Foundation to work on the shift to proof of stake. So they're saying this is not the same Ethereum that they classified as a commodity. And basically now, if it gets classified as a security, remember most other altcoins are ERC20. They're on the Ethereum chain. And what does that mean for them? So interesting times indeed. But one thing I will say is this is what you start to see towards the end of a market cycle. Before it's debatable whether there's going to be another flush out all the way down to make new lows, or whether those lows have already happened. But from a timing perspective, this is right on time. This is exactly what you'd want to see when the market is reaching peak FUD and near a bottom phase. So look over here at what 𝗍𝗲𝗍𝗍 said. By the way, also, let me know in the comments, are you surviving this bear market? Are you underwater? Are you okay? Did you get caught in a bull trap? Also, give the video a like and hit the bell notification and subscribe to the channel if you're not already, so you can see anytime that we do go live. So 𝗍𝗲𝗍𝗍, this is one of the top traders I outlined to you guys the other day. He trades with mega size. He says the story of the market right now is incoming supply. So no demand, just incoming supply into the market, meaning massive selling pressure. You got Voyager, Shanghai, which is the ETH upgrade, whereby a bunch of coins are going to be unlocked and potentially could hit the market. You got Mt. Gox, you got Silk Road, which is the government that's selling $1 billion worth of Bitcoin. They sent that to Coinbase. We had those accounts, which we verified and proved was coming from them. And then you have basically over here is the Voyager basically map of where you can see everything is being sent to Coinbase and how they've been liquidating assets. I think it's in the region of $350 million that they've liquidated over the past. Oh, there it is on the top. $350 million they've liquidated in the past 6 weeks, which is no wonder we've had additional selling pressure. But we'll get into the price levels for you in just a moment. I think this could be 𝗍𝗲𝗍𝗍's trading account. So this is 𝗍𝗲𝗍𝗍 over here. I think this could be his trading account. Massive shorts over here, which have been open. So Chimp shows here, breaking news, GMX Whales up more than $10 million on his Bitcoin and Ethereum shorts. And you can see actually his mark price. Mark price is the target price of where he's taking his profits. So on Ethereum, he's looking at $1,412. That's where he would exit his position. He entered at $1,607. Bitcoin, he began to short that at $23,000. And his mark price, or his take profit, is at $20,122. So would need to double check to see if he has closed that or if he just moved the mark price further down, because key levels have been lost. Key levels have been lost. I'm going to show you on the chart in a moment what I see coming next. And then in other news as well, this came out yesterday. You had President Biden calling for 30% tax on electricity used to mine Bitcoin and cryptocurrency. And it's just basically blow after blow after blow for the crypto markets. But one thing that I do want to say with this would be incredibly difficult, if not near impossible to implement by regulators, because how will you be able to determine where the electricity is going? That is a very difficult task to implement. So this is probably one of the FUD pieces that can most likely be cancelled out. Today's important. Today's very important. Of course, we're breaking key levels. The weekly close on both the CME as well as on the normal spot chart is going to be of paramount importance, and it's all going to stem around what happens today with the economic data that's coming out. So the main one that we're going to be looking at is the non-farm employment change, so the NFP, and then you have the unemployment rate as well, which is coming out later on today. That's at 3:30 p.m. my time. If you're in the US, you'll probably wake up to this news. If this comes in better than expected, of course, that's going to be good for the market. It has a possibility of a relief rally or a little bit of a bounce, and then shorts will most likely close out their positions. That could create a nice big spike to the upside. If not, shorts are going to compound their trade towards the downside, and the levels that we're looking at are much lower, guys. They could be as low as that 17K level. I'm going to show you on the chart in a moment. But another piece of good news, at least from a leverage flush out position, is that this is basically the second largest liquidation event since the FTX collapse. So there you can see long liquidations on the bottom. That was the FTX long liquidations that happened on the left-hand side over there. And these are usually indicative of major and pivotal points within the market. So if you do see prices come down to that 17, 18K level, and these long liquidations continue towards the downside, then you can say that most likely the worst is over. We don't know if the worst is over price-wise yet, but time-wise, I think that we are getting quite close, at least for this move. And I outlined this chart to you guys a couple of days ago from Jason over here, and it essentially shows you the magnitude of the sell-off based off of these major events. I'm sure you can all agree what we're currently experiencing in the market right now from a fundamental and news-driven perspective is on par, if not worse, than what we saw over here with the lunar collapse. We got the interest rate hike fears. We got the FTX collapse, which happened over here. And then now this is the Silvergate collapse, which is plus the California bank collapse, plus obviously the Bitcoin tax, the Shanghai release over there of those coins, unstaked coins, plus that's going to be all the dumping from Voyager. It's compounded with even more than what these would be. And what I want to say about this is if you have a look at these charts, and at the end of the day, this sell-off is less than what these ones were as a percentage. So if the percentage drop is less than these, that is still indicative that something is changing within the market and that we are in a transitionary phase, which I've said for a long time. I've said that there's a real possibility that the market is in a transitionary phase. I told you, don't expect that we're going straight into a full-blown bull run where we're going to rally on straight to new all-time highs, but expect that we're within a range, and that range is slowly going to start moving up. So instead of breaking down to new lows, maybe we make the new range low at about that 18K, and then we bounce and break through that level to 30K, and then maybe the next new range low is going to be at that 25K level. So simply put, it could potentially be a transitionary phase. So here's the liquidation levels over there. You can see a lot of liquidated players within this market at the moment, and something to keep an eye out on once this flush is completely done. So here's SIVB. This is their initial sell-off that they've had now, already 60% down, pretty much in just one candle. I am on a monthly chart, so very high time frame, and you can see this has got a long way down to go. This is super bad, guys. I mean, for something with so much history, all the way back from 1987, and it literally, from a technical analysis perspective, I'll zoom in. It literally looks like it's going to be retracing from a TA standpoint, most likely down to about 57, which from that point onwards is still another 42-ish, 43% down from here. So not looking good at all. And then you have Silvergate. Silvergate is just continuing to print new lows. It's just straight down for it. Looks like it's going straight to zero over here. Unless someone jumps in and bails them out, this looks like it's going straight to zero. So really, really bad over there. Bitcoin futures chart over here overlaid with the S&P 500 futures. You can see they've now broken back into unison. So they've converged. We had a big divergence where Bitcoin did not catch a bid, which is not a good sign. The white one is the S&P 500. That caught a massive bid to the upside, and Bitcoin just continued down. And now you have the S&P 500 catching up to Bitcoin. And the S&P 500 is the one that is the real concern. This is definitely the big elephant in the room, because if this mid-range level gets cleared today to the downside, that would be catastrophic. It's going to be like a hot knife through butter, all the way back down to probably the range lows. And if you lose those range lows, it's going to be looking bad. Then you're coming all the way down to new lows. And as you can imagine, crypto is not going to withhold that. There's absolutely no ways crypto will withhold that. This is the only way that Bitcoin makes it down to that 12 to 10K region, is if you do see a massive breakdown of the S&P 500. But with that being said, it hasn't happened yet. I know it's fearful out there. I know it's scary. Look, we've lost the 200-day moving average, which is obviously not a good thing. But as long as you're holding this mid-range over here, there is still hope. Once you clear below that mid-range, pretty much you have to flip bearish and start to look for much, much lower prices. So that is your final line in the sand if you are a bull. Bitcoin is also at the final line in the sand, and I'll get to Bitcoin in a moment. First, I want to show you short time frame. Our trade played out almost to perfection. So that's it. Closed out in profit. That is the S&P 500 short trade that we took. Please let me know in the comments, just out of curiosity, did you guys take this trade? Hit the comment section there. Yes or no, were you able to get in on this trade? If you say no because you don't know where to trade it, consider trading on Prime XBT. Prime XBT will give you access to stocks, bonds, commodities, a whole bunch of things. There is a link in the description below over there. All right. Also, Huobi, if you have a look over here, the Huobi platform token, which is called HT, that suddenly dropped from 460 down to 31 cents, which is a drop of more than 93% with only 10 minutes. I mean, that is wild. And the current price has recovered now to 387. Justin Sun, which is basically, he's one of the founders of Huobi. He said that because some users triggered the series of leverage liquidations, and this is actually just normal market behavior, which is crazy. If you call this normal, I mean, that pretty much went straight to zero as well. So a lot of mayhem within the markets. Yesterday, we covered the risk over here. I told you, and not just yesterday, we've actually been covering it since Friday last week. So a week ago, I told you, you're contracting all the way down into those teens, right? If you zoom out on the VIX, which is an indicator that measures the volatility of the S&P 500, when that squeezes down, usually that means that you're having a healthy contraction for the S&P 500. S&P 500 has the opportunity to track onto the upside. But when this starts to expand towards the upside, that means volatility is kicking into the market. And for the most part, a rising VIX is a decreasing stock market, which equals a decreasing crypto market. Here you have the stock market high that was set when the VIX expanded from this level, which was at 1648. That expansive move is what led to the major top within the stock market being set, and the sell-off began. I told you, once you come into this box over here, anywhere between that 16 and 18 level is dangerous territory to be stuck in longs, because an expansion from this phase can happen within a moment. And there you got it. We got the expansive phase, which is why everything started to sell off. Now you need to watch today if there's going to be continuation within the VIX. Once the VIX gets above the 30 line, and we haven't been there for a long time. The last time we were there was in October of 2022. If you start to get above this line, this is where the biggest moves happen. The biggest moves happen between 29 and basically 35. I'm warning you now about this. I'm just bringing this up right now just in case. I don't think that this is necessarily going to happen, but in case it does, because I haven't mentioned this in a long time. It's been probably 4 or 5 months since I last mentioned this. If the market starts to sell off aggressively and you have dry powder and you have cash on hand, all you need to do is go and look at the VIX. If you see the VIX hit levels between, if it hits 48, I'd probably deploy some of my money in there. The reason why is because the major crashes that we've had within crypto and the major bottoms that happen all happened around those levels. So let's quickly grab let's grab this over here. So if you have a look over there, that was when you had the 2015 bottom. This is the one from 2018 where we set the market bottom for crypto. It's when crypto hit basically above that 48 mark on the VIX. And there again, and then you had, of course, COVID was a much more drastic measure over here because all markets had a meltdown. And that's where it got to about 85. So you want to be deploying if you see the VIX at least come anywhere around that region. I'm not saying that's going to happen. I'm just outlining it to you now in case. So you have an additional tool to trade with confidence and understand that this is reaching extreme measures if it does get to that level. Okay, let's move on. The dollar. Simply put, the dollar is holding above our key level, which is the little pink box over here. As long as it does that, our next target remains 107.3. Same thing, an increasing dollar typically means that crypto will struggle in that environment. So we are aiming for that target over there. Next, Bitcoin. This is the bullish hope that you would have. If you are bull, you're hoping for something like this. This would be a swing failure pattern, and it all hedges on the weekly close. As you can see, yes, the weekly candle looks terrible. I mean, you have a strong full-bodied red candle at the moment. If you see that candle spike up and close anywhere above the yellow 21 exponential moving average. So the yellow one over here, put on the 21 exponential moving average. That would can be considered a swing failure pattern. A swing failure pattern is a bullish formation. It means that you reclaim key levels, which is the support level at 21,600. A reclaim of that level and a close above there would activate longs, and you could probably trade that long up. I reckon that you would probably break that 25K horizontal resistance that we had, because you've touched it at that point. You've touched it 1 time, 2 times, 3 times, and now you're coming in for the 4th time. How high it goes after that, I'm not so sure, but this would be the ultimate bull trap if it were to happen. If you were to see price come down below, reclaim, break through the major resistance, and then have a major liquidity grab, because this was an easy short to take. I thought it was too easy to take. So full disclosure, I didn't take that short. I thought it's way too easy to take. Crypto does not usually trade that clean. Like the S&P 500 would usually come into strong horizontal resistance, and it's pretty much as clear as day it's going to reject. Crypto likes to screw more people over. Statistically, it likes to screw people over and go above, deviate, come back in, and then come down, which is why I didn't short that level, but I sure as hell did not long into that level either. So if you see something like this, liquidity grab, stop all those guys out, come back over. This is where you should definitely consider taking your profits, because it is possible that then you still come down and make those ultimate new lows. So let's see what crypto has in store for us. Is it going to be another trap after trap? Because this is the way that it's been playing out over the last couple of weeks. It's just trap after trap. Total 3 looks terrible. Same thing as I mentioned before. You have low, high, lower, high, lower, high. You've broken into the range. You're now starting to lose the mid-range. If you see the swing failure pattern on Bitcoin, you'd be looking for the same thing over here. Possible swing failure, break back into the mid-range over there or above the mid-range. And then potentially you can have another leg up. And then whatever happens next, doesn't matter. We take profits at this zone over here. So if you see total 3 reclaim like that, that would be your trigger or your activation to go long. It would look something like this. So there you go. Stop below the previous swing low. That's what you'd be looking at. But obviously, at the moment, the risk continues to be towards the downside. This is a less likely scenario. I'm just telling you, if this happens, then that. Okay. Hope that makes sense to you. Renko chart nailed it. Renko chart flip bearish over here on this candle, which happened last week Friday at 22,500. And pretty much if you just put these candles on your chart and look at nothing else, you can probably trade your account quite successfully as a swing trader. Low leverage, maybe 2-3x long, 2-3x short, and simply when it flips green, you go long, stops below, and that's it. Easy peasy. All right, you have the Ichimoku cloud over here. You can see that if you do look at the ADX and DI, the DI positive, which is the red one, means the bears are starting to gain strength. This is already crossed above the green, which means the bears are starting to take control. But if you start to see the blue line tick up, which is the ADX, and it starts to move aggressively towards the upside alongside that red line, that means that the bears have major control within the market. What bulls want is bulls want this green line to flip above the red line again, and for the blue to slowly contract down to give them a bit of breathing room. It is coming into the Ichimoku cloud. We identified yesterday and the day before that this was a possibility, but we were looking at a less aggressive line and thinking that might only happen next week. But as you can see, we have arrived over here. So this is a critical level for bulls to hold. If bulls fail this level, very similar to what we'll be seeing on our horizontal charts, then of course you're going much lower, and then there's a chance that this will at a later stage start to flip back down bearish, just meaning that we're continuing in a consolidatory environment. All right, interesting chart over here. Cool, just let me know in the comments. All right, yes, I got rugged. I see GhostX Studio says I got rugged. I got rugged by Eskom. Eskom is our electricity service provider in South Africa. All right, guys, very interesting chart over here. The Coates moving averages and the Fisher distance from EMA. I just want to outline some key levels over here. So let's zoom in. If you have a look from a bottom perspective, you can see I've highlighted it. It's as clear as day over here. Wick down, FTX, obviously this wasn't yet the FTX crash, but that was what we thought was going to be the major low within the markets in May, June. Look at where the oscillator is, right? Oscillator at the bottom into that deep critical zone, cross back up, and then you had a big bounce. This was the FTX saga over here. Big bounce to the upside. And then let's move on to these zones. If you go forward, pretty much looking similar over here. So sell-off comes into the deep zone, bounces towards the upside. I'm not saying the trend won't continue to the downside. I'm just saying that at the very least, you should expect some sort of a bounce. Look at where we're situated right now. We're deeper than any of the previous times. You're all the way to the -4 level, and you are coming into a little bit of horizontal resistance. Remember, there's also the CME gap. Let's quickly go to the CME chart over here. There it is. So let's take the indicators off so you can see nicely. Do you see that gap over there? The candle goes up, stops, and then it gaps up. Just make it bigger for you. There you go. There's an empty space over here. That happens, obviously, for those of you, I know most of you know, but for those that don't know, why does this happen? Essentially, what happens is that because the futures market closes over the weekend, yeah, I think it trades most of the day. I think it's 24 hours a day, Monday to Friday, but it closes on the weekend. When that market closes, if Monday opens up mega bullish and Friday closed over here, then it just gaps straight to the upside in the same way that you see with the stock market. That gap has a high probability of being filled. And as you can see, it's now been filled. They don't always fill, but it's about 90-something% of the time those gaps fill. So that gap has now been filled, which means that price could potentially bounce from this zone and continue on to the upside. Okay, levels that we're looking at. Let's keep it very, very simple. I also want to take you through just a few altcoins. Unfortunately, won't have the time to go through all of them because I do only have 9 minutes left. But here we have it. You've broken below the mid-range. Next target is ultimately going to be all the way down to 17,875, which matches up with that diagonal. If you start to lose that, it looks really, really bad, really quick. Here you have Ethereum. Ethereum is currently losing that level as well, which is coming in around 1424. If you lose that level, start to close dailies below here, your next target is going to be at about $1,200 for Ethereum. Atom, I'm going to outline Atom because it is coming into a key zone. I did also want to mark off, wait, let me just see, where is this chart for you? Here it is. Let's bring that across. Okay, here we have it. So if you have a look at this tweet over here, he says, one of my favorite things to do when the market is dumping like it is now is to look at the BTC pairs and see which one is outperforming Bitcoin. From my experience, these are usually the best candidates for a very strong bounce once the market begins to recover. Notable cases. You got DYDX, you got Stargate, 𝗕𝗏𝗄, and Atom. So here we are on Atom. That's why I wanted to bring this up for you so you can quickly look at Atom from a technical perspective. Where is it? Daily chart, trend line. You got the ranges over here, rejected off the top of the range, and you're currently coming into this region over here. That's a nice, solid, longing level, right? If the market is going to bounce and its BTC pair is strong, well, it's strong against the BTC pair, then if Atom comes into this level at about $9.73, not only do you have a strong horizontal, you also have a nice diagonal. It's a double confluence point, which you can go long off of, which is the other one that he said over here. Let's quickly look if I have it. DYDX. Let's see what DYDX looks like. Do I have? Yes, DYDX. Where is DYDX? So DYDX currently looks to me like it had a big blow off top, complacency bounce, which happened over here. It's come back into the range. If it bounces off of mid-range, then great. Where's mid-range? Let's quickly pull this across and see. So grab that. Here's your mid-range. If it can hold that level, I'll make it big for you. That could be an opportunity. That could be an opportunity. But otherwise, it's coming all the way down to range low. So just be careful on something like DYDX. Unfortunately, I won't have time to go through all of them. Let me know in the comments quick. Let's see. Maybe I can take one or two. Something that you want over here. Phantom. Someone said Phantom. Let's see. Where's Phantom? Phantom. Here. No. Filecoin. Phantom. Here's Phantom. Okay. Similar to DYDX. Massive blow off top. There you go. Complacency bounce. Back into the range. Coming into mid-range over here. If it manages to bounce from mid-range, then great. Near. I do have near, so I'll show you. Near is near to me. Near is all the way back at range lows. Can't believe how terribly this 𝗬𝗍𝗆 killer has performed, but nevertheless, there it is. Coming into range lows could be an opportunity. Obviously, the closer you get to the lows over here, the better your trade opportunity would be in order to create an invalidation. Remember, with trading, guys, you need to know where is your invalidation. You have to find an invalidation point in order to take a trade. It should be the first question that you ask yourself. Where am I wrong? If I take this trade now, where am I cutting it? Because if you don't have an idea of where you're cutting it, you're going to be absolutely screwed. Let's see, Solana. Where's Solana? I have Solana. Someone asked for that. Solana, similar to NYAG, coming back down towards its range low. So this one's really suffered. Look at that. I mean, trend line, rejection, 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 straight into the top of this range over here. That was a previous support all the way back from June. Support again in October. Failed to hold that rejection, confirmed it as now resistance, which is not good. All right, Stargate. Do I have Stargate? If I have it, I'll chart it. Let's just see. STG. They don't have like a search option on here where you can just, you know, like just type it in and search for the coin. I don't have Stargate on this list, so see, is there anything else? IMX, I'll do IMX. I think I have that. IMX, he has IMX. Okay, that will be the last one, guys, because unfortunately we have to finish off with a couple of other important things. There's IMX. It is approaching this zone, which is an area of interest. The EMAs don't really matter because it doesn't have enough history over here. So this is the zone. I would tighten this up now that we're approaching this level. This is kind of the level that I'd be looking at. See what happens over here. You're looking for a reaction. If there's a reaction of 60 cents or 64 cents, that could be an opportunity. This you can kind of view as a mid-range. So it's losing the mid-range within that range at the moment. You want to see reactions first. You don't blindly long unless you have a clean and clear invalidation from that point. Otherwise, you want to see how does it react out of that level and then base your trade off of that. What I do is I trade at the extremities. So I wait for price to get into the extreme levels. When it gets into the extreme levels, I zoom in. I go on a 4-hour chart or a 1-hour chart, and then I take a look at that nice and close. Okay, so that's that over there. Here's the final line in the sand for the bulls. For myself personally as well, by the way, I'm watching this. We lost I told you yesterday, closed below the 200 EMA, and you're most likely going to have continuation to the bottom. That happened. You closed below. Straight away, continued. Another 9% down happened in quick succession. Now you're watching this level. Okay, any closes that happen below the 200-day moving average, which is the dark blue one, that's it, guys. Then you got to be out the market. I mean, you're talking about much, much lower prices. Ultimately, everything is still within a range. I'll get to the range now. I want to quickly show you this. This signaled as well to you already on Wednesday when you had that close that happened below the dark blue line, this blue line over here. As soon as you had that close underneath there, flip fully gray on the super guppy indicator. So the EMA ribbons, that means close your position. Long's over, right? You still made profit over here. It wasn't glorious, but you made profit. If you blindly traded this and you took no profits at the top there, this would have still given you, as soon as the close happened, you're out. 2.9% trade. You shouldn't have lost anything if you were trading that. All right. Next, bull moon. Bull moon has arrived. You need the RSI to kick on up. In order to do that, the RSI will start to cross to the upside if Bitcoin gets back above 21,278. 21,278 is the pivotal level. So remember, I showed you on the weekly chart now what that would look like. If you were to see something like that, swing failure pattern, reclaim those levels, then it's possibility that you're going to go up higher. So the next couple of days and the weekly close is absolutely paramount. Very, very, very important. Ultimately, crypto is within a range. This is the range over here. You had the range high, would have been a short down to the mid-range. This was from a lesson yesterday, so don't pay too much attention to all the trades. I didn't screw you guys out of the trade and not give them. All trades are given in the Discord group. All right, as soon as you had this candle close just into that mid-range over there, you did have an opportunity to set your stop above that daily high, and you would have been able to enter into a short position. Obviously, this happened very, very quickly. The target would be all the way down to the range lows, 18,100. 18,100 is where I would take profit if you're somebody who's shorting the market right now. Then you can reevaluate. If you start to break below here, Probably you're not going to have 2 deviations like you had here. Start to break below here, and then you open up the possibility of going much, much lower after that. What else? Okay, there's not much to say over there. Our target was met. This was the short time frame trade. Can't talk English. Based off of the bear flag, right? So you had bear flag, breakdown, bear flag, breakdown. Target has been hit on the short time frame trades over there. Spot continues to sell off. Futures continues to leverage short. Open interest is relatively flat, so not over leveraged within this market. That's it, guys. Very quick show. Please make sure you hit the like button, hit the bell notification, subscribe to the channel. Also, a shout out to our sponsors. Check them out over here. I recommend, if you do not yet have an OKX account open one up, because you can get up to $10,000 in sign-up bonuses. But not only that, we have an insane initiative that's coming up. Absolutely insane. I promise you, it's going to be one of the most mind-blowing initiatives you've ever seen in crypto. I can't spill the beans yet. You have to be patient until we give you we'll give you the details. I can't say anymore. That's it from me, folks. I will see you all on the next video. If the market has extreme mayhem, I'll be active on the Discord. Also, signing up to one of those links gets you into the Discord. So check you all on the next one, and stay safe out there. Stay safe. Be patient. Don't overtrade. Don't overexpose yourself. Cheers for now.